Bitcoin is right in the middle of a technical danger zone, yet one that in fact could prove to be bullish. Here's how and when we will know for sure, and how we can maximize our returns and minimize our risks. A lot of important things are now happening in Bitcoin, and I might in fact make a few shorter to-the-point episodes in the upcoming weeks to swiftly touch base on what's going on and how to properly deal with it, as in all with the purpose of staying one step ahead of the curve. In this episode, we'll take a good look at something entirely critical for the upcoming price development so that you can feel confident no matter how Bitcoin were to play out. But before that, do remember that nothing in this episode constitutes financial advice. These are my own personal thoughts and observations only. And if this little baby episode helps you better understand what's going on with Bitcoin, then please return the favor by hitting the like and subscribe buttons. And more importantly, share this with others who may still be scratching the back of their heads. And now to the technicals. A couple of weeks ago, we talked at length about the ever so critical level between $45,000 and $50,000, yet with a particular emphasis on the $46,500 cluster resistance, as it amounts to an increased likelihood of being the B-wave reversal spot. For until proven otherwise, this whole zigzag theory is still very much in play. Yet with that said, we wouldn't be doing our job properly if we were to not look at the coin from the other side. Now, after the previous episode, we decided to play things safe, as the $42,000 area amounted to a significant resistance and possible ending of that B-wave. For as discussed on Long Life Trading's Twitter, but more explicitly in this episode, the rebuy was triggered upon taking out the high just north of $42,000. And the reason for this is that it would nullify that top from being the end of the B-wave. For put simply, we could with a high degree of certainty expect the price to proceed to the original target zone between $45,000 to $50,000. And at the moment, Bitcoin has already reached that level, and this brings us to the true essence of this episode: how to exploit any run out from here on to our full advantage, whether that zigzag follows through or if Bitcoin decides to take a bullish route. For as of yet, we just don't know. However, what we can do is of equally high value, something that will either make us a lot of money and at an absolute minimum risk, or avoiding getting obliterated. Here's how. Statistically speaking, the A and C waves tend to be of equal extent. In this case, as the A wave of the B wave was about $13,000, it would amount to a final Bitcoin target of $50,000 to $51,000 before rolling over. Though with that said, there's still a good chance the prospect C wave won't match the A wave at all. For don't ever forget that we're dealing with probabilities, nothing else. If, however, we were to take a look at the fibs, we quickly see that this area perfectly matches the 618, which on its own makes up for a rather strong horizontal resistance. So what then about that $46,500 area we talked about a couple of weeks ago? Is that no longer relevant? The short answer is yes and no. At the time, we didn't know how the prospect B-wave would develop, because its development would entirely determine its likely points of reversals. 2 weeks ago, all we knew was that the $46,500 area was made up by a little confluence of technical resistances, as in this diagonal resistance and the 0.5 fib respectively. Now, on the other hand, the technical map has emerged and we have more data to base our probabilities on. For again, that's all that we do. We look at whatever information we're graciously given and single out the relevant signals from noise, and then make a probability-based assessment. And now that assessment has in fact been updated. This leaves us with two important things. First of all, we don't know where Bitcoin will top out and correct. For it can sure still happen at 46,500, give or take. And secondly, we don't know whether this zigzag will in fact continue its path. Now, here's what I will do, and mind you, this is highly personal, yet to me, this is the ideal way to decrease the risks whilst at the same time maximizing any future returns. Unless I'm given an upper bearish blue sell signal on any time frame above the 1 hour chart, I don't look to sell at the peak, and the reason is simple. If this were not to be the B wave of a zigzag, but rather the third wave of a bullish 5-wave impulse, then based on the fact that the third wave is typically the longest of the three, we have statistical cause to expect it to surpass the 618 at 50 to 51,000. In this case, until we know, there's no value at all in selling at any given point. Instead, once this move were to correct, whether it's the C wave of the B wave or the third wave of a 5-wave impulse, we should be able to extract a first level of valuable information. If it were to peak below 50 to 51,000, we can statistically assume it to be the B wave. For in such case, this move would be shorter than the prospect A wave. And here's where things get truly interesting and relevant. For the lower the point it were to peak at, the higher the probability of it being the end of that B wave. If on the other hand the price were to surpass that 50 to 51k resistance, then chances significantly increase for it to be a third wave. If that were to be the case, there are technical ways to anticipate the length of that third wave, something we'll then get back to in due time. But until we know, the way I'll play it is this. Once this individual move here retraces by at least the 382 fib, given that it occurs at or below 50 to 51k, I'll once again sell off the entirety of my marathon position. And the reason for this is that the 382 is something of a minimum retracement to count. In such case, we're likely in for an initiated zigzag C wave in which things can turn real sour real fast. Just as we've already discussed in detail, and depending on where the B wave were to top out, we're talking likely prices as low as the high teens or low 20s. If on the other hand Bitcoin were to again take out that pivotal top, this entire zigzag is automatically disqualified, as this, with its then 5th wave in the making, would no longer qualify for a B wave, as B waves are always in the shape of an ABC, as in 3 moves. Given how things have developed, I will stay patient with my current position, for at the moment this could just as easily be the end of that zigzag B wave as it could be a bullish third wave impulse in the making. For that reason, this is a high risk area, yet given that we know what to look for, we can quickly determine the proper technical roadmap and act accordingly, as in either maximize our profits or get out of the way at the technically earliest moment possible. All in all, to neatly sum this episode up, if Bitcoin breaks above 51,000 and closes above it, chances are strongly in favor of it being a third wave bullish impulse rather than a B wave. And the same principle applies if Bitcoin at or below 50 to 51,000 were to retrace by at least the 382 fib and then take out the previous local top, as it would then disqualify this entire move as a B wave. Yet until then, our zigzag theory stands, but to minimize our risks and to not risk selling our position off prematurely, we'll release it all at the ever so critical 382 retracement. For everything between that and the previous top, that's the critical point. That was all for now. Thank you and goodbye.